So welcome to this panel focusing on attention versus retention and sustainable revenue models. I'm Jeremy from Masari, research analyst over there, so I'll be moderating with all these awesome people up here. So we'll kind of just go down from my left onward, let them introduce themselves, what they do with their companies, and then how they think of which is harder to achieve, attention or retention in their role and why. So Anne, we'll start with you.
This is Anne I'm partner of IVC. IVC itself, it's a Japan venture capital, started out from Japan and expanded globally. We have been investing actively since year 2021, and we being used to be very active in the GameFi consumer space, also a little bit DeFi infra. Our latest hit are actually Aether. We are probably the largest holders on Aether, and we entered at the price of 60 million. Also other projects including Carve, Sonic, SVMs are doing pretty well, and lately we did 2 DAT investments. One is Naka and the other one is BNC.
Hi everyone, I'm David Ching, investment director at Animoca Brands. So Animoca, we used to invest a lot in gaming, consumer apps, but actually my background is also in traditional finance. So recently also looking a lot at the RWA, infra, AI verticals, and also involved in some of the digital asset treasury things that is also quite hot recently as well. So yeah, great to be here. Thanks.
Hi everyone, my name is Alice, and I'm from Foresight Ventures, investment partner. And for Foresight, we're a crypto fund based in Singapore, 400 million asset under management. And we do invest in a lot in payments, in stablecoin, in AI recently. So we've been investing actively in all the crypto neobanks, all the crypto startups. We used to do a lot of gaming, but right now we're kind of conservative, right? So we shift our focus more towards AI plus crypto and stablecoin payments. Thanks.
Hello everyone, my name is Joy and I'm the APAC lead from Top. So Top is the biggest venture builder and venture capital on Ton and Telegram ecosystem. So we recently just announced our last round at a valuation of $1 billion. So we actually always actively investing in the dApps on Ton and Telegram, especially the gaming dApps. So thank you for having me here.
Awesome. Alice, I'll kind of start with a question for you. So when evaluating a startup, when you're looking at metrics like daily active users and downloads and kind of general hype against retention metrics like stickiness, how do you kind of view that when you're evaluating startups?
That's a good question to start with. So I'm an investor, so when I evaluate projects, I often see a lot of the metrics. And truth to be told, I don't think either one is more superior than each other, because I think these two sets of metrics stands for different skill sets. As in, if you look at the spectrum, the ones that's good at creating hypes, creating attention in the crypto community, that means the team is crypto native, right? They know who do you need to work with, what kind of right levers you should pull. But that doesn't mean that they're really good at, product building. They're not good at maybe UI UX. So that means on the other side of the spectrum, if you have good retention, if you have good lifetime value of the user, that means you must build a good product, and that really fulfills some certain people's need. That's why they keep paying you money. So what I see more often is these two set of groups are different teams. I think both are great. If you're doing really great in both spectrum, it's nice. And I will give it a try. I'd love to invest. But, we're VC, we're greedy, we want everything. So apparently we want both. But you cannot have both, so either start from one side of the spectrum. Yeah. You see Plasma, that's a good example, right? They sort of start with the DeFi native, they start with the attention economy, and then they will gradually shift to, building the ecosystem of payments of all the developers on them and try to build a sustainable ecosystem. And on the other side of the spectrum, you see a lot of the traditional apps, traditional fintechs especially, trying to, that's already been quite successful in different regions, in Latin America, Africa, right? And then they try to bring more crypto natives attention. So both sides are learning and try to merge with each other. That's what I see.
So you mentioned that Foresight's kind of shifting a little bit away from gaming, more into AI and consumer. How has the shift from looking at these metrics changed over the different kind of sectors in the space? Are you now more focused looking at kind of retention of users rather than attention, or has it kind of stayed the same throughout?
I think that's case by case. So for us, if we see this project as like a crypto native project, and then in the end, the exit strategy would be launch a token on Binance, big get Bybit, right? Then attention is very important. TVL is very important. And on the other side, if you see that project as eventually you want them to be acquired by other big companies or even become a public listed company, then lifetime value, and then all the retention metrics are really important.
Awesome. And then David, over to you real quick. So from a financial sustainability perspective, what revenue models best align with user retention and profitability?
Yeah, so, because we also invested in a lot of games in the past, I think, especially for Web3 games, I think a lot of Web3 games, they were focusing on, airdrops, right? Getting a lot of users, they farm airdrops, and when that, the token after TG, basically a lot of the users, they don't get the incentive to play anymore. I think that's key is that, if there's no retention, then, if the game is not great, or, if they only stay for, the airdrop, then, essentially there is no, retention there, and there's no value in the game anymore, right? And a lot of the portfolio or, Web3 games that we see these days are still, going through this model. And another type of revenue kind of generation is the subscription based kind of model. And I think, for Web3 right now, we start to see some short video type of portfolio coming up, which is actually quite good to adopt this subscription model. But again, the content in terms of how they attract the users is also very important. So, I think that is something that we need to consider as well, because if you use the subscription-based model, how you fit the tokenomics into that subscription is also very important. Why you need a token, I think it's quite important, because increasingly in this cycle, what people or the market sees is that attention, of course, is important into TGE, but after TGE or going forward, how do you keep the users? How do you keep cash flow generation? Is increasingly important. That's why the RWA theme and the DeFi and Perp DEX is so hot right now, because they are generating continuous cash flow and revenue, right? So I think there is maybe two factors that we need to consider. Yeah.
Yeah, that's a good point. It looks like TradFi might have something going for them when they focus on cash flows all these years. And then Joey, kind of over to you. From a BD perspective, what kinds of partnerships or ecosystem plays have been the most effective at turning attention into long-term engagement?
Yeah. So actually, we built one of our non-custodial wallets, Timekeeper, We actually built different partnerships with different projects. I will say when our ecosystem was at the bull market, probably the most successful successful type of the apps is game. So only Catizen contributed a lot of revenues into our infrastructure. But when the market is going to this stage, we find out that the apps with the real world utility contribute us the most consistent revenue, like the eSIM card, and as well as some like the travel apps and allowing users to pay buy crypto and to buy their tickets, buy their hotel when they travel to other places, and also we also integrate with some like local crypto payment. For example, in Vietnam, we integrated with a local payment service provider, and at the very beginning, probably the daily transaction volume, daily transactions maybe only have like 50 transactions, but after we promote this project, the transaction volume is growing every day, and we will see no matter it's in bull market or bear market, the people will always pay for their real world usage. So that's a direction we are looking on recently, and just to look for more products which can help with people's real usage.
I want to ask one more question. When it comes to like travel apps, people are paying in crypto or paying in fiat?
In crypto.
Right. So basically, everyone can spend crypto with Telegram mini app.
Yes.
That's pretty cool.
And just to clarify, what you're kind of talking about too is all happening on Telegram.
Yes, it's all happening on Telegram. And they, first of all, they have their mini app. So if they do not have it, for example, the Vietnam crypto payment service provider, they probably will use our API, and they will allow the users to using TON and USDT on TON to pay on the offline service in Vietnam.
That's really cool. And a question for you. So what signals tell you that a project has the right retention DNA before it shows up in the numbers themselves?
I think it's for the founder himself. It has enough knowledge about Web3. Like Web3 these days, it's not really just about like, oh, you build a product, you just design your tokenomic, and then you go listing. It's not that simple. It's from the data you are listing first. Like you need to getting aware that by the time you are going for listing, it's not just pushing to the exchange. First, you need to prepare at least like $3 million for listing. This number sounds really shocking, right? Because just for like your reference, like such as if you wanted to go for like Binance spots, like average they will charge you like 7 to 8% of the tokens. Binance Alpha is probably around like 3%. Bybit recent charge is like 1.4 million. Skate is like 400K. MEMX is more flexible. It's about like 60K tokens and also like 60K of like for the airdrop campaign. So for you to actually getting like more liquidity before you go on TGE, you need to pass all the matrix for like exchange for you to get on listing, and also getting all the like investors money for you to have that like cash flow for the retention. So I think that for you trying to build a product like inside like the Web3, because like Web3 it's about liquidity. Like after your token is listed, you need to manage the liquidities, making sure that your token doesn't die. So your investor won't be chasing after you like token price looks like shit like after you go on listing. So it's like after you go on listing, you still need to manage the flow, the like your investor, your community's expectations. So for us, like seeing that kind of retention, the signal for us, it's if the founder himself is really aware of the Web3, or are you newbie to like Web3? So like for us, like our appetite for investing into any kind of like the startup project, it's not about just like about your products, but it's really about how you know the whole like Web3 the game design is actually being designed and also being played here. Otherwise, if you are just focusing on like product and also buildings, then you should just like go for the Web2 routes. Why are you raising money from Web3, right? Why are you? And it's actually much more complicated when you manage the token after you go on listing, then listed on like IPO like a NASDAQ. So it's not that simple that you think that it's so easy to raise from like VC. Like this year's, I think VC deployment is probably by the lowest for the past like, I think 4 to 5 years. Reason being that I was just telling Alice that like, I feel like VC from this cycle is the one being rocked by like either like not really the by the project, but like from the exchange market makers, like projects community. We are always the last one to actually receive the token. And where do the retail getting the airdrop from? Is actually VC's money, actually. Yeah. Because like if the project itself doesn't generate revenue, where does these like listing fee like airdrop coming from? It's all the VC money. And this cycle, I think most of the VC actually are not that profitable unless you are doing like some of the liquid tradings and also hedgings. So for anyone like entering into Web3, building like a Web3 products, you really need to be consulting a lot of people, getting understanding about the theme, about like how to get the attention, the hype, and also continue to have that healthy cash flow for you to sustain. If you are not be able to be listing for this cycle, then you need to be bear for another like cycle. Then your health like cash flow will be helping you to go through at least like a few cycle for you to come out with the attractive like products or attentions or just the hype, whatever like that will be keeping you with a healthy like cash flow. Of course, that revenue could be one key thing about like keeping you alive and also like helping you to sustain your like monthly burn rate to go through that cycle. But at the same time, if you're creative enough, you could be coming out with any kind of like mechanism with a raise, such as or like Aether. They came out with like node cell before. Now they are also doing like DAT. I think few projects have also come out with the DAT ideas in a way that to help with token price or like raising more money to help like sustaining its like a lifetime and also the cash flow. So whatever you are focusing and building, I think that managing the cash flow, whether it's like revenue or further raise, it's really a key thing. And also like understanding the whole mechanism about like how this Web3 like theme is actually working and who to work with. It's like super important. Yeah.
That was a very detailed answer. Thank you. So kind of harping on that a little bit. So from the token incentives standpoint, what are the biggest challenges to actually designing the incentives that encourage real retention instead of like mercenary behavior? Joey, we can kind of start with you and then work our way down.
Yes, and I think that's question can split to the pre-TGE and after TGE. So if we are talking about the pre-TGE stage, projects always distribute the incentives to different participators, and it drives significantly on the user numbers growth and probably can drive a very high DAU and people always keep here and the retention number will be very great. But after TGE, that's also a situation on Tong ecosystem in the last cycle. After TGE, people just withdraw their token and sell it and never return. So the problem we would like to solve right now is to just design or encourage the project team to design like a new sustainable mechanics. So which allows after TGE, even after TGE, people will not just sell it and never return, never come back. So a successful case is about building a real product. So if we are talking about the gaming session, we have seen several very great products on Ton and Telegram right now. If you guys look at the top 50 grossing app list on on Telegram, you will find out several very successful games always on the top of the list, and the apps generate real revenues, even they do not mention any tokens. So that's the power of the product itself. The mechanics in their product drives user stay at their app and play in their app and contribute revenue in their app, but not just come here for the airdrop. So the very important thing is to just design a very successful product and use the right mechanics in this app and retaining your user, but not just the incentive and airdrop to them and leave a mess after TGE.
Yeah, to add on to that point, I think in order to design a successful campaign, you have to bear in mind that it's impossible to rule out all the airdrop hunters, but to basically decrease the percentage of that and kind of like, one thing that I could think of is to increase the cost of like participating in these campaigns. And then if I would need to spend like $5, $10 to participate, then I'll have to evaluate if the product is meaningful to me, if I really need this, right? Only if that I think that in the future, this app will bring me more value than this, I'm the core user of it, then I will decide to sign up for this program, and then I'll get the airdrop and whatever. So I think it's always pros and cons, and how do you kind of keep the barrier of entry high, but not too high, to rule out the real users, but to selectively choose the ones that could benefit to your app in the future, right? So I think that's always like a balance you need to keep it bear in mind.
Yeah, I think for me, I always emphasize the importance of having the product market fit rather than token market fit, because increasingly in this cycle, even the exchange knows, right? A lot of users may be just pure airdrop farmers, which will die immediately after TGE. They will leave. So having the real product, almost treat it like a project without a token. Of course, there's Web3 mechanics, there's tokenomics considerations, but having that core product that users needs and they will stay to use it is more important than ever in the current cycle, right? And in the future. So, I think getting short-term users might not even be that important anymore, which is increasingly the case. So you can see that a lot of these, airdrop campaigns shifting more to TVL, because TVL, at least there's a entry barrier, right? You have to upfront contribute a little bit of value into locking in, to the project, right? So at least that increased the entry barrier, yeah. So there may be something similar that worth considering.
Anything to add, Anne?
I think sorry, what's the question again?
Basically, how to have user retention.
Oh, okay. Yeah, as for the user retentions, of course, our incentive is always like the most direct way, like you do the airdrop and all these. But think about like Web2. How does like any kind of like this successful like Web2 startup become like a unicorn? It's the way that you should be considered. A lot of them started with a subsidy program as well, such as like the Uber. They probably give you some coupon, or like Airbnb give you some deductions, or any of the new app that's launching at the beginning that will be giving you subsidy as a marketing fee. It's part of their marketing fee on their financial as a way that could be attracting the initial like a retention or user base. But afterward, it is depending on your product. If you can keep those like users staying on your platform, like taking example is some of the payment protocol, such as from Japan, like the biggest like payment platform is called PayPay. It was actually founded by the UniPay and also like the Alipay group of people. And before like PayPay entered into Japan market, they had already like Line Pay, which you also have like Line in like Korea market. And why all of a sudden like PayPay entered into like Japan market and took over like the whole market and went over the market, and Line even exit its like a payment protocol market. The reason being is because like PayPay started with this incentive like program about cash rebate. Like as long as you use like PayPay for paying in the Web2 like fintech world, they give you a certain like a percentage back as a cash reward. So this is actually a cash reward actually coming out of the like the PayPay's existing like financial balance sheet. So it serves as partial of its marketing expense. So instead of like putting this expense with like Google ads or like Facebook ads, you actually use this as a direct incentive to the users. So the user actually feel like, oh, that you got partially of an incentive, but afterward, the real retention is actually happen on your UI, UX, and the product itself. Whether it is good enough for for the user, they feel like, oh, if it's a DeFi project, if the UI, UX is actually better, or like if it's like any kind of projects, such as like Panda Funds or like Hyperliquid, why are people still staying? It's because it's a like such as Panda Fund is the first like a meme coin like platform, and it's the biggest. So people find the value about, oh, you can come out with any kind of creativity and you make money by creating meme coin. So people get money out of it. And then for Hyperliquid, it's the first like for the perp DEX that is actually could be open to like more like tokens, and trading volume is already there. So I think that you could be starting with some of, and also like their revenue will be buying back on the Hyperliquid token. So the a Hyperliquid token will actually keep going up, and that is the key to keep the users staying on your platform, because you trade more, but then at the same time you get the token prices actually getting pumped as well. So I think that getting your token increase in value is also a key to actually retain the user, not keep selling once they got the tokens. And also for project controlling the supply, knowing the supply of your tokens, managing supply and also the demand is also a key. So I think for getting the user, it's about how you incentivizing either your user, either your product is extremely cool, you help people making more money, which is mostly in the Web3 case, and or your UI UX just like be everyone else like in the market, such as I think some of the, even you use like centralized exchange, some of the like features, you can tell the difference one from the other. Some of the UI UX is better than the others, and you feel like more comfortable as a trader trading within certain kind of apps. So you have to create an understanding about your niche and what kind of value you are creating in taking like even from Web 1, Web 2, as like humans like point of view to actually retain your users. Either you focus on like the user experience, or like some of the actual money reward is not just one off like airdrop, but instead it's your token price being pumped and people get more, or your staking that's actually yields is more attractive than the other protocols. So any kind of mechanism that you design is actually creating value for your users. I think that's a key to keep like people within your like platform and products.
David, coming from a traditional background, what other like frameworks or business models do you think should be applied in the crypto space that could work?
Yeah, so I guess some of the other speakers also mentioned, right? Actually, for Web3, I think the key is, don't treat it as a Web3 project, right? Build the product first. And of course, Web3, there are some advantage and disadvantage. So, how do you fit the tokenomics? Does it need to have a token? I think it's a key thing that you need to consider. That's the kind of the first thing. And, having, some of the successful kind of Web2 apps also offer incentives, right? As we mentioned before as well. So, think about how those work. Like a lot of the, we invest in a lot of games in the past as well. So in the beginning, for example, a lot of games, even for Web2 games, they offer, a beta, right? And during the beta, if you play, and advance to say level 10, level 50, you get limited edition weapon, right? So a lot of non-referee games also does that. So it doesn't need to have a token, right? So think about something similar, because that kind of limited edition token have value forever, right? And only those users participated in during that period can have it. If you just give out a fungible token, the token can vary in value, right? So that's one thing. Another thing that I mentioned a bit before is also the subscription model, because or kind of a membership model. So this can be applied to like video platforms, short video platforms, something that people get recurring, coming back to use it, often, right? Or it can be a freemium model as well. So once you kind of watch 10 minutes, you have to pay for watching the other 30 episodes, right? So I think that's also a very good model that some projects can also consider as well.
Yeah, and then kind of going from all of your guys' experience, what is one surprising lesson that you've learned from a founder themselves or looking at a project related to retention or attention that you guys were very surprised about and thought was very antithetical to how the world actually works, but ended up working for that project? Joey, we can start with you at the end.
Yes. Actually, recently I reviewed several different games in Telegram, and I find out several very simple game design probably can contribute to a very good retention number. Right now, if you are building a game app on Telegram, we assume that if your retention rate, the day 7 retention rate can achieve like 13%, that would be a very good result. But one case we find in our ecosystem, probably their day 7 retention can even reach out 20%. That's obviously a very good number. So why can they achieve that good number and at the same time without token? So we believe they probably have a very successful game mechanic in their game, and at the same time, they allow users to share this game to different friends. But at the same time, they need to tell their friends how to use this game. So once their friends and the inviter, they finish all the tasks, the inviter and their friends can get the rewards. So by doing this, this game just achieve a very good retention number, as well as the sharing rate, as well as the low user acquisition cost. So they achieve these 3 goals at one time. So I believe that's a real good use case in Telegram, and that also tells us if you are building a product in Telegram, just use the social features in Telegram and utilize them, and just encourage your users to tell their friends in real world how to play this and get them involved in this game. That drives the real retention, and that drives the real players in games.
Alice?
Okay. So we've been looking at the crypto card space for a long time. So before, like 1 or 2 years ago, when we were looking at this industry, we felt like it's really hard to make money for any of the card issuer, card programmer. And then lately, I actually find out that there are a couple of companies that started to make money. The reason why being firstly, they are not targeting crypto native users, but targeting at traditional users where people might live in the countryside of like Southeast Asia, Africa, Latin America, where they don't have access to traditional cards, traditional banks. That's why they need this dollar account. It's basically their financial lifeline. And that's why they keep spending, regardless of how much you charge as transaction fees. And we could see initially we still feel like it's really hard to make money out of the users with really low value, lifetime value, and even like each transaction is very small small amount of money. But like when the momentum builds up, when the economy of scale comes in, when you look at these companies' metrics, they're actually making a lot of money, and maybe 1 or 2 billion transaction volume per year, and then could be like 100 million revenue per year. So this actually is pretty surprising. And as also going back to our point, like if you can actually find the right group of people that you can provide real service that they need, they are willing to pay you money and become a real loyal user to your app. And I think crypto card is a good example of how do you use crypto, the advantage of crypto as being like decentralized, as borderless, and you can get access everywhere, to kind of fix a problem that traditional fintechs cannot fix, or to fulfill the needs of that group of people that traditional banks kind of ignored, or like they abandoned that group of people. But crypto can actually bridge the gap, and that's where the real value comes in. And that's quite interesting for us to see, yeah.
David, anything on your end for surprising lessons?
Yeah, so, I want to touch on out of a project that we are kind of incubating right now, because I come from the TradFi space, and when I come in full-time to Web3, I always have the dream of reaching the Web2, TradFi, and Web3 world. And I think this cycle, we're really starting to see that happening. Institutional coming in, BlackRock ETFs, MicroStrategy, DATs, government buying. So I think the Web3 side is starting to reach out back to Web2 as well. And we are having this out of A because of this. And a lot of the, Web3 wealth, right? They accumulated a lot of, wealth in digital currencies, and they are starting to look for real yield. Yeah, so, of course, they still do investing in pure Web3 projects and so on. But, they start investing also in tokenized money market funds and, tokenized credit funds and things like that. So that's why I think, something that of the out of A narrative makes sense, because, it is the right time, right? So, there's this new project called Nuva that we are collaborating with a figure, which is, let's just list on Nasdaq as well. So there is some different assets that they can bring, and we will take care of the kind of the DeFi side of things for this out of A as well. So, this can offer real yield like 5 to 10% as a base. And then, of course, there's potentially, DeFi looping, you can use Pando and so on to boost it to, 30 to 50 even. So I think that it's potentially quite interesting because, for users who have been in the space for some time, they definitely have, also accumulated some digital assets, but they are looking for, yield to park it there, right, as well. So I think, this is both, far-fetched goals, it seems, a few years ago, but it's really happening.
And over to you.
I think the kind of surprise it's whether it really depends on how much capital you have actually, and also like what kind of like product you're trying to build here to solve what kind of like problems. As David mentioned about Figure, it's before I joined IVC, I was actually with Foxconn Corporate Venture, and we actually invested into Figure. And back then we invested into like DC Digital Currency Group and also Galaxy Digital, who actually also went on DCD didn't go on IPO, but a lot of like their portfolios such as like Coinbase, Grayscale, like Genesis, they just like did fantastic and fine. So I think that, but the life cycles for like such as like Foxconn, its own capital, so we can actually invest into these like equity play and actually waited over almost like 7-8 years before it went on IPO. But as for the crypto funds, we actually have like shorter life cycle. So our fund life is averaging about like 7 years. That's 5 plus probably 3. So for the crypto funds, usually we will have a mix of evaluation between like the crypto projects, or you are going for pure equity, going for IPO. So if it's like the crypto projects, then we will be looking for founders who are actually being flexible enough in understanding this game design actually well enough. Taking some of the probably our portfolio that have been like doing well lately, such as like Zeus protocol. It's the first like BTC-fi like a layer on Solana. By the time that we invested, it's still like called Dapio. It was actually a DeFi aggregator layer. So they pivoted like a few times before they actually found Zeus, which is the BTC-fi layer. So they managed the cash flow, they went through the bear cycle, and they just keep the communication open, transparent with their investors and also the communities in a way that finding the right direction, what it's like product market fit for the market. And also by the time that we invested into Aether, it was still called like M1 Network. It was focusing on decentralized like cloud compute for gaming. So it was still like almost now I wouldn't say completely like 100% different than the current narrative about like the decentralized cloud compute like platform, but it is still like somehow a little bit different. So it's trying to still like go through a very, very tough time, like the example, and also Sonic SVM as well. They used to call Mirror World, and they were actually doing a gaming distribution platform. So all these founders, we actually see the common trait about being resilient, and you will be able to hold that pressure like during the bear cycle and being resilient enough, and you're still staying open-minded, talking to the investor, talking to the communities, understanding like what the market dynamic is right now, and always be prepared for when the market pick up and getting bull market again. So I think that like these are actually the kind of surprise and challenges that we see within the founder. Stay resilient, stay open-minded to the market, and if you are really focusing on building product and also revenue generations, while like if you don't want to manage the tokens and you still think that you can go big, like IPO is still a positive route to go for, especially seeing recent like IPO of all like figures and big goals. I think Kraken is also going on IPO as well. So they actually regulatory framework is actually getting more friendly to crypto space as well. So it depends on what kind of like business you are building. If you are getting like a real revenue from the enterprise grades, then you probably it's better like for you to comply to the regulatory framework and going for the IPO route. But if your product is actually more for the general like crypto native consumer focus, then like token could be a way for you to go. So really understanding about your projects and what kind of like direction and fit for your personal like character and also traits. I think that will be the key for your project to actually go successful.
Awesome. So I'm going to have one last question here, and thank you guys for sticking around. So we're going to skip right to the alpha. So I want a one-word answer from everyone. What is the sector that is going to get retail to come in so we can have an actual bull market? One-word answers, or maybe 2 words. Keep it short. And we can start with you.
Sector?
Yeah, like AI infra, AI gaming.
Yeah,
apps.
probably. Yeah, AI infra, AI gaming.
This is not saying that.
Yeah, stablecoin. We invested into JPYC, the first stablecoin in Japan. So there's going to be a few like use case. So I think it's really there's a demand in the market that will be the trend. Like looking at the demand of the market, if there are actually enough like gamers, such as we also invest into like a K-pop agency as well, because we feel that this is a money-making business and it's in the trend that like the market buying this idea. So I think anything that market buying like AI infra or stablecoin RWA, those are actually all good direction. As long as you are really bringing in the demands and like solving a certain kind of like problems in the real world, or even like creating dreams and hype, that will be okay. But as long as you know what market is actually needed for and also what market is craving for, I think understanding the market, go to conference, like talk to VC, talk to anyone in the community, just talk to people, like then it's going to give you like more feedback than you will be like imagine. So I think just like stay open-minded, be flexible and be resilient. Those are the key things that I would suggest like to founders. And even for investors as well. If you are a retail investor trying to make money out of the crypto, just look through like following a few like key influencers or like key traders on X. Usually we do as well. Like we follow on X and see what's the latest news and everything. It's usually happen on X. Yeah.
Awesome. David, over to you. Maybe 3 words?
Yeah. The thing is, I think now this cycle is so different from previous cycle. So it's hard to use one vertical to describe what will come next, right? But as gaming is in our blood, and I think GameFi, some way of digital entertainment will come back, and I think that will be the next thing that cause real mass adoption as well. And I think that's underway already.
All right, Alice, you have 4 words.
4 words. I have only 1 word.
Perfect.
For us, it's stablecoin. So we're betting on the future of like more people will start to use stablecoin. So that will bring in more liquidity into our industry. And also AI can use stablecoins as well because AI cannot pass through the traditional KYC AMLs of the banks. They don't have an identity to provide. So, giving them a wallet, spending cryptocurrencies, especially stablecoin, makes the perfect sense. That's why we're like investing a lot in stablecoin related project. Either it's on-chain or Web 2.5, or there's on-off-ramp providers, exchange, licensed, regulated licensed providers, PSPs, or the crypto cards, or even just like stablecoin related, travel apps. We're also very, very interested. So if you're building any of that, we're happy to talk to you.
All right, last answer.
So I should have 5 words. Right?
Perfect.
So I believe because we are a special investor, especially in Ton and Telegram ecosystem. So in our ecosystem, our target will be, one is assets. Assets include all things related to assets management, like payment, also maybe PerpDex, and recently PerpDex protocol is really popular in just this week. So any assets management tools which will bring users, which will encourage user to trade or save or use your tool to make any payment, anything you can help people to manage their assets, any tools. Also another one special is on gaming. So any game, you can encourage user to spend their money in your game and retain them and always get good revenue from the users. So that's my answer, assets and also games.
Awesome. Thank you guys so much. Let's give a round of applause to the panelists.